What's going on, YouTube? Hope everybody's doing good today. Just wanted to go over a quick market review over high shift analysis quickly pre-session before it was too late getting caught offside for a deeper loss that I took. So looking over here, as you can see, we're still heavy bullish because we have two breakaway gaps and efficiencies that are getting respected. So initially, my draw was for it to keep expanding to the upside up to these highs, right? And then I had my eyes on this old previous week high. But as you know, that did not play out in my factor this morning, and this is why. So I know my charts look a little messy right now. Just gonna go over this real quick. So over here in Asia, we have a huge expansion downwards, right? But we reject this imbalance and we respect, as you can see, we have 1, 2, 3 fair value gaps. So this is our breakaway gap. This is our second candle, which it can wick into, and our third candle we want to see is our accumulation, where we can see bodies close into it, but we want to see it push out and fail to close, definitely in our breakaway gap, and wick out of this second one if needed. So that's what it does. Bodies close a little bit inside the inefficiency, but nowhere near the CE of it, and we have a rejection off of that MWOG. This is a new week opening gap right here. This fib is our dealing range from this high to this low from today for today that we'll be looking at later. If I hide that for a second, we can see that there's our Asia displacement to our new week opening gap. We pull up. This is what I have my eyes on throughout the pre-session, going into pre-session. It was actually the 1 hour. In the 1 hour, this inefficiency is what I have my eyes on, this bearish fair value gap. But we ended up using it to trade up higher during London, which we had an expansion upwards after dropping down. So we moved a lot during pre-session, and we moved a lot overnight. So that means we can expect pre-session and open to be a little tougher market conditions, especially because we had a Martin Luther King Day, and markets are always known to be a little tough a day after the holidays. Jumping down to the 5-minute, we have our pre-session right here. Our pre-session open to market open. So not very clear on the draw, right? We're not anticipating anything major with our large overnight movement going into the open. So I'm really just waiting to see what the market's gonna give me here, you know. We're spending a lot of time in this inefficiency, and we're already setting up to be a high resistance market condition. We pull up and we take out this buy stop. So buy stops have been swept, and that was at 9 o'clock. So before this, I was paying attention to buys, like I said. So I was looking at entering in buys once we displaced higher. So I have my bullish FVG right here. And then I also had this 5-minute inefficiency highlighted to see how we reacted up into these levels after sweeping the buy stops. If we want to continue to push up higher into this high and buy side liquidity, or if we respect the CE of this and show us that we're bearish, which we did. I got caught offside pre-session, and the market was spending a lot of time in between this inefficiency. It wasn't displacing higher, so that's not a good sign for bullish movement. We rejected off of this high and disrespected this bullish FEG going into 930 and respecting the bearish FEG. So that switches my offside, that realizing I was offside, now being onside, looking for sales, especially because we have a opening range gap to the downside with 50% lining up with minor sell side liquidity. So that is a strong draw right there. That's a strong draw. Anytime you have price action lined up with your opening range gap or NWOGs, NDOGs, any inefficiency, liquidity, anything you can use with the opening range gap is just a stronger draw liquidity. So switching over to our micro section, it's the same. NASDAQ. Switching over here, there we have our bullish inefficiency that got disrespected and our bearish FEG above that got respected. So I ended up closing underneath there. Once I realized that we were offside, hit my stop loss with this down close candle because this is a bullish order block with a breaker and a breakaway gap. So we don't want to see price go lower than this down close candle. So I hit my stop, we pulled back up, and we actually trade out of that going into 930 open, which I'll get into right now. So back on the E-mini, right here is our 50% wick on the weekly chart. So we know with wicks, we're likely to reverse at 50% of the wicks. So I'll just show y'all real quick. This wick that stands out right there, that's matching up with the bottom of our daily FEG. So that's a key level that I'm paying attention to. So we're opening with a high resistance market condition, as predicted. And we're just wicking up in this inefficiency for about 5 minutes before we displace. And I was on side because I had to pay premium to know what was on side and what wasn't. So I just ended up tapering this because I didn't feel confident. Now looking back at it, I don't know why I didn't. I paid a premium for it. The information, we respected bearish key level FEG after sweeping buy stops and disrespected bullish PD arrays. And we're respecting our daily SIBI with our 1 hour wick. Our weekly wick, excuse me. Don't know why I didn't take it, but this would have been the position held up. And I think ICT took something very similar to this. I think he got in up here pre-session and had his stop above the highs somewhere around here. But this is what I seen. This is what I should have targeted. And like I showed y'all earlier, opening range gap was right by these lows. So that's what I had my eyes on. Didn't quite play out in my favor of being onside. Just didn't quite have enough confidence to pull the trigger. So now we're in our opening range right here. We drop down, respect the CE of the new week opening gap. We give a fake run to the upside, rebalancing this price range, but still leaving this inefficiency open for a breakaway gap. We retest this, given our institutional order flow drill inside of the 930 FVG, which you could have cut a position at the bottom of it, and kept your stop loss above the first candle of the 930 FVG, first presented, and targeted midnight. or the full regular trading hours gap closure. So that was the second position I seen. I wasn't really too interested in that position because, as you can see, I know we would be stuck in a range, especially trading down after we came up to balance this price range. I knew we'd be um, in a high resistance market liquidity, and I just wasn't really too interested in putting risk on the table for that. We were inside our macro though. As we know, we like to run on stops and displace in a macro. So not a bad position, just not my cup of tea. But looking on the 5 minute, if we take everything off, market conditions were just high resistance as predicted. I mean, this is what comes with it. We did have this FEG that got respected. I'm gonna take this off on the 5 minute. That gave us confirmation that we're still bearish, heading down into our full gap closure. So we spent the remaining day from the opening range to going into lunch, late lunch, where we created the price leg at 11:45 Eastern time, and consolidation and a high resistance market condition, not leaving anywhere. You don't want to get involved in this. This is where you catch a lot of losing trades and your mental capital. So we shoot up with a breakaway gap, and then we have two more. So like I said earlier, the first one we want to see left open. The second candle we can wick into. The third candle we accumulate in. So I seen this trade as well. I just wasn't monitoring it correctly. I wasn't on my computer. I was just looking at it on my phone, so I wasn't able to catch this too. I think I have a problem with too much patience, which is not a bad thing, but also I need to be a little bit more engaged. But we respect this fair value gap, but actually be like this. And we start pushing up. The reason I was a little hesitant too is because we rejected off of this 930 again, and we just swept buy stops. But we have our breakaway gap open, and we showed that we were strong bullish because we left this open. I'm gonna take a peek at it on the 5 minute. We left that open, and this is it on the 5 minute chart. So you can see we failed to close in the CE of it, and we just displaced higher. So seeing that on the 5 minute, I probably would have been patient with this fair value gap. But as we displaced upwards and took out this buy stop again with the breaker, we have our breaker up here. We have our breakaway gap with this price leg, and then we have a strong displacement upwards above the breaker. So we don't want to see a return back down into here. We drop down to a 15-second. We can get a little bit more, analyze this better, but it initially drops down to the 50% of this 930 gap and pulls above it immediately, which is what we want to see for bullish movement. So you could have got in a trade like this. Put stops below this inefficiency or right here, just a breakaway gap, which we want to see obviously left open with our down close candle. We don't want to see it pull back into. And targeted buy side. We haven't quite delivered it yet during here, but most importantly, we did deliver this high. And I still have my eyes on this old previous week high to get delivered as long as institutional order flow remains bullish. We do have two clean lows right here, but these highs were just way too clean with bullish order flow on the 1 hourly and the higher time frames indicating that we should remain bullish. These highs were just too clean to not get taken out today. And we barely missed this buy side liquidity, which is interesting. But I just wanted to go over a short market review and know where I went wrong, how I was able to shift my analysis, know what to do for next time, and keep that mental capital as well, because holding during high resistance market conditions can just get to your head, and you don't even want that, especially as a developing trader. It's just a very negative impact on you, and I would be rather just be patient and have my discipline strong. But anyways, hope y'all enjoy. We got better week coming, and y'all stay safe in the markets. Thank you for tuning in, and see y'all later. See y'all later.